All right. Good morning, traders. Welcome to the F.A.C.E show. Holy moly, what a day already. Can you believe it? Can you believe this move that we're seeing almost across the board? I mean, you go to these big moves like the one in the euro. I mean, this is a pretty massive move. If you guys didn't catch it, we did complete an ABCD development in the euro. You can see it just like this. Very it was just ABCD. You guys see that? We overshot it a little bit. I ended up exiting a third of. I had a huge. This is the biggest position I've had all year. Really is because it's the euro. What is the vol been in the euro, Ryan, as of late?
It's been in the 5%, but we're up at 6.23. Been as high as 7.17% today. So
today it's risen, but considering it was down at 5 earlier, when we were down here last week, I knew vol was pretty low, so my position size was pretty big in this move, which is good, obviously, when you get an explosion in volatility in the direction that you want. And thank you, Ryan. So I had to trim a lot of my position last night. I got hit 118.86, I think, is where I got a big chunk of it out. I'm actually looking to add back. I think this is a pretty big move in the euro, but you just have to be a little careful with it now. We've seen some massive moves. We were just talking about in the chat room, and if you guys aren't in the Forex Analytix chat room, you should be. I mean, Kman and I were just discussing this just a moment ago regarding the Aussie, and you can kind of see the conversation here. But I'll keep that for our subscribers. But when you're talking about the Aussie, we are a little overbought, and you can see we're at the 261% extension. You can see the intraday RSIs are very stretched. And so when you see situations like this, you have to be extra careful with your positions. I'm not saying that the Aussie can't continue higher, but chasing it up here is quite the risk. Kman, we're closing in on some levels that you guys talked about on the flow show, right?
Morning, everybody.
Good morning.
Morning, Blake. Good afternoon to the rest. Yes, we are. If you look at the longer term, we are approaching the halfway mark of the whole 2021-2025 decline. So we were talking about a lot of stuff on the flow show this morning. But I think it's perhaps an interesting watch now. Yes, it's still very bullish. Yes, we've had that dollar shakeout, which may not be finished, but sometimes we have to look at little levels and see where we end up. And we're also very close to that 2024 high. So in the next, what is it? Well, from where we were when we started that discussion, the next 30-40 points, I think it's worth just looking at the level and see if it goes or not. So I decided to get out of my longs for now.
Yeah, I mean, this is a very big resistance, as you're pointing out. 50% retracement. This is a weekly chart, so you guys can see, how far the Aussie has gone. And again, you just go look at intraday. I mean, we're at a 261% extension of this is the head and shoulder pattern. This is the head and shoulder pattern setup that so many people were bearish with in the Aussie just a couple of short days ago, and it has squeezed to epic proportions, and something that a lot of us actually caught on the long side last week. And I look at the Aussie, and I don't sit here and go, we can't go any higher. I just think you have to be like Kman's saying, you got to be a little bit more cautious. I mean, we were just talking about where we could find places to buy, and we are now dipping to those levels that we might start getting close to there later on during this session. Let's talk about this dollar move as a whole. Ryan, you've seen it in its full freaking glory right now. The dollar has absolutely gotten killed at the open today. Now we are starting to see a little bit of a recovery as traders are kind of getting their head back on straight. But do you think that the dollar is toast here? Do you think the dollar is just starting its major move where the euro gets below or gets above 120? You see the Aussie dollar reclaim 70 cents. Even sterling might get up towards 140. Who knows? Is this where it all starts for the dollar?
I don't know. Nicely done on the euro dollar trade, by the way.
Thank you, sir.
I'm still skeptical about all this because, everyone keeps saying, it's sell US, but we're not seeing sell US across the board. We're not seeing sell US in stocks. We're not seeing sell US in bonds. So this is a currency move. It's probably got stronger links to commodities than anything else that's going on. We've discussing this. We had a pretty long flow show this morning and discussed this on the flow show. And this might be the possibility that you're seeing strength in the euro, Aussie, and whatever, not because everyone's getting out of the US, just because no one's investing in the US and then putting their money elsewhere. Because remember, investment flows are constantly coming in. The money under management is always increasing. So it could be a case that everyone's going, right, there's no reason to sell America, but take the political risk, take what's going on. We think there's better value investing new money elsewhere, which is why you potentially seeing the dollar getting sold off. But and Kay made the point, if the market was wholesale selling US assets, 120 would be in the rearview mirror by now. You'd be up at 125, and we're not seeing that wholesale selling in US assets. So obviously, could this be the start of a big move in the dollar? Yes, but I'm skeptical that the dollar's going to die all of a sudden and it's going to fall off the earth as the reserve currency or anything like that, purely because I'm not seeing evidence in other US assets to say that the sell America trade is strong.
Okay. Yeah. And you're right. We are seeing it even today. We're seeing treasuries up, yields have come down a little bit. And U.S. equities, under a little bit of pressure, but really, I mean, we're almost, I think actually the future's almost back to break even. I mean, we've almost closed it all. Hey,
if you take the volatility we've got in the dollar, where else are we getting that volatility? And it's in commodities.
Right. And we're going to talk about that here in 1 second. Hey, let me jump in here real quick. Mike writes in, I don't believe for a second that the U.S. Treasury will be involved in coordinated intervention with Japan. Mike, they already are. Besant, they may not have pressed the button yet, but the coordination is there. The Treasury and the BOJ and Ministry of Finance have already talked. That actually happened a week and a half ago. This is not like, what had happened on Friday was a coordinated effort without actually pulling the trigger. The initial steps have been done, and I don't think anything's going to happen from here, Kay. I say that to Kman because Kay is very familiar with the situation. We get enough yen strength, and you can see obviously the yen strength has come through. That intervention efforts are off now, but the Treasury and Ministry of Finance are very much in communication and have been for the last 2 weeks.
For the last since October 2025, Katayama was the first thing that they did. She called up Besant, and Besant was responsive to it. And as I said over the flow show, they have a very close cooperation, which is different from former administrations. Even if we compare to what Yellen said. Back in the days, Yellen already said there was this kind of tacit agreement or green light that Japan could intervene whenever they deem necessary, because there's these G20 lines, right, that they always refer to, that they want to respect, etc. But Bessent and the US administration are different, and they are in a much closer cooperation that they were before. So it's always going to be with at least the blessing of Bessent, but this shows that their cooperation is or coordination is extremely tight, and that is what the market actually got a bit surprised about. And I said this morning in our chat room, I said, if the market's really surprised about it, I well, I thought that they that everybody knew that they were so in such a close talks and
Communication,
cooperation.
right?
So
Yeah, yeah.
I mean, it shouldn't come as a huge surprise. Now, the surprise lies in it coming over that the Treasury gave the instructions to the New York Fed to go and check rates, but okay, not everything has been said there. I mean, it is. I mean, it's totally clear that it is Besant and Katayama who are driving the ship together now. And as what I said as well on the flow show, we're 2 weeks away or something of the Japanese elections. If the market quiets down a bit right now, and assuming that Takaichi would get the victory, the market may attempt to buy dollar yen again or to sell yen versus different other currencies, and then the intervention risk will be extremely real for me, extremely real. The real
Yeah,
intervention.
and Kman, I want to continue the conversation about the yen just a little bit more. Most people in the world don't trade yen. I think it me, you, Ryan, and maybe like two other people trade yen. Other than that, most people could give a shit less about the yen. But I do think it's an important topic today. When you're talking about the dollar yen, I'm with you. At least your longer term view that yen should be weaker over time,
Uh,
meaning that the dollar yen, even though we've come off from like the 160 level to 153, 154, and there could be another couple hundred handles down. I think over time the yen's going to continue to weaken. Would you agree with that statement?
Um, I've started to review that a little bit because I have the impression that, and I'm talking in terms of fiscal year in Japan. I think
Mm-hmm.
there is a chance, and I'm saying there is a chance. It's a thought right now, and it should not be traded right now. I think yet because I think there may be another leg lower in the yen first, but I think the second year of the fiscal year in Japan, the yen may have a different look to it because if Takaichi gets everything and she can put everything in place, you are going to see the effect that the bond market is probably going. Yields are going to probably push higher in the first part of the new fiscal year. Probably the yen also at least remain on the defensive. But I think that if she can do everything she wants, we may have a different look to the yen for the second part of the fiscal year, and that the yen in a more natural way, the data will have to confirm that, but that the yen in a more natural way could start to strengthen a bit more. The good thing is that for that to happen is that still in that context, the U.S. administration will welcome such a move. So it's going to be with the blessing of the US, but also I think maybe in a natural way. But it's just a thought right now. The yen could, in my opinion, maybe even strengthen towards the second part of the fiscal year.
All right, thank you, K-Man. Like I said, it's a very niche product is the yen, but it is worth noting because it's got the world's attention at the moment. Let's talk about precious metals because this is definitely in the crosshair of every trader out there. And one of the conversations that we had, well, I had on the week ahead video, was that the silver market is entering into a state of blow off topness, and now keep in mind when I filmed the video on Friday we were trading at 101. Today we're at 110. I mean, we are literally 10% higher today than we were at on Friday. a blow off top doesn't necessarily mean, oh, we got a blow off top, so let's short it. No, we are in the blow off top stages right now. And I think that this acceleration that you're seeing, I don't know where it's going to stop. It could stop at 150. It could stop at 200. It could be 250. I don't know. But I believe this acceleration is at such an accelerated state that whenever we do peak, it is going to be a generational peak. And I always say generational because, you know, and this is the point I made on the week ahead video. I'm 53 years old. I don't know if it will break whatever high that we hit, wherever it is. I don't know if it'll break that high again in my lifetime. And, you know, the average American, you know, male life is, you know, probably in the mid 70s. So I've got maybe a good 20 on me to be in the averages. But what I'm saying is whenever we hit a high, it's probably going to be the high for quite some time. And it is a level, it is something that I think we all should be paying attention to. These are not normal circumstances that you're seeing this. I would not say that you want to be shorting the silver market, but you definitely have to be on the very careful as this moves higher. Ryan, what are your thoughts about these precious metals and these moves? I mean, gold has broken out above 5,000. We are, you know, obviously on our way to looks like much higher prices. Silver, you know, where is it going to stop? What are your thoughts on all these precious metals that we're seeing?
Yeah, I'm in the same boat as you. We're getting to parabolic state now, which
God,
is
that was the
always
word
dangerous.
I was looking for. That was the word I was looking for, Ryan. Good word.
Yeah.
All right, continue on.
Good word for a Monday. Yeah. So, you know, what do you do with it? You know, people always want a short move, jump into shorts like moves like this because they think, you know, they're going to catch the big move down. You know, but it can, like you say, can only another 10, 15, 20, $100 before it does that. So, you know, you've got to be careful. When it was at, you know, silver, when it was trading at, you know, 80, 90, people going, oh, I'm not going to buy the top here. And then it rallies again. And then they want to say, oh, I would like to buy it at 80, 90 again. You just got to be careful. You just got to let the price action do its thing. If you want to short it, wait for a defined top. Whether that's short term, long term, or otherwise, when the price has a moment where it can't go up again, and then you just try and ride it if you're the right side of it. But you've got to keep your trades tight because shorts have not been the best move going forward throughout this. You may get a few quid out of it, but then it's flipped around again. But where it stops, no one knows. We've got these markets, yen as well, dangerous markets for a lot of traders. You know, people get pound signs, dollar signs in their eyes with this volatility, but it can be more dangerous to trade than a quiet market.
Yeah, for sure. I mean, this is extremely dangerous situation, and I mean, you know, we all sit around. We're like, can we just get a pullback? But they're not pulling back. I mean, look at the price action in silver. We are just pegged to the highs. No pullback. No pullback at all. Every little pullback. I mean, this is like what, you know, $2, $1.50 earlier today. I mean, that was bought up and gobbled up immediately. You know, you want to think about what can accelerate like a dollar move. Because Ryan, you were just talking about, you know, the move in dollars is in commodity. You know, you're seeing it all in commodities, and if this move continues in silver, which I'm assuming it's going to, same with gold. You know, you look at palladium. You know, we're up 5%. Platinum's up another 2% today. I mean, if these moves in precious metals continue, you know, this is just gonna, you know, keep that downside pressure on the dollar. If there's, you know, you see silver at like 120 and gold at, you know, 5,200, I would assume that the euro dollar is probably closer to 120 than 118. You know what I'm saying? Anyway, some really strong moves. Kman, you've been a precious metal bull for quite some time now. How are you feeling about where we're at?
At these levels, I'm not chasing it anymore for now, but we can't we cannot do anything else than note that and yeah, gold is still the fundamental reasons, that is geopolitical issues, whatever, of all kinds, are still there, and then silver, especially with those supply problems, those problems are still there. So whatever happens, I don't see a complete fallout. But I'm actually right now like a bit like the rest of the people saying like, are we going to get a pullback, or is this really the end of the world as we know it, especially for silver? And yeah, the longer term, I'm still bullish. But in the short term, those kind of moves, when you do $10 silver, $100 gold overnight again, because I believe on Friday we closed another 5K mark,
Yes, under
correct?
5,000, correct.
Yeah, so we did another $100. How long can it go on for, y- yeah, now I'm not chasing it anymore. And I'm just waiting to see if there are going to be pullbacks one day or another, because we are never we're never completely safe of the risk that all those silver buyers are going to be satisfied at one stage, and all of a sudden the bid disappear for like what we saw from 54 down to 45 can happen at 110, but then you're talking about the double of the move probably, and you lose $20 relatively swiftly. That's well within the cards. So that is why I prefer not to chase here, although the fundamentals remain pretty much unchanged right now.
All right, sounds good. Sorry, I was focused on something else that was brought to my attention, Kman. So I appreciate your comments regarding the precious metals
By the
complex, and
way,
especially, yeah,
Blake, I don't know if you saw, but Michael Berman.
that's exactly what
Okay,
I'm.
okay, 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 okay.
Yes,
All right,
thank you.
okay.
All right. So, Michael, yeah, good to go. We'll see you in about 8 minutes. So stick around. All right, and we're going to be bringing in Michael here in a second to meet with all of us. He is the handle of S2N News. So we'll see him here in a few seconds. So make sure you all stick around for that. All right. I want to talk about a few other things. And again, thanks, Kman, on your comments here. It is something to behold with these moves in precious metals. You can't fade them, but man, you got to be careful trading them at this stage. It is one of those situations where you're sitting on. Yeah, from a trading point of view, you're either on the train or you just get out of the way. You don't try to stand in front of it. It will peak. They will have highs, significant highs that are put in, during this blow off top process. But you and we have no idea where that's going to be at. And you can try to look into your crystal ball and try to figure it out. But realistically, we are traders. We just look at price action, and price action is not telling us that this is the high just yet. Come back and talk to me tomorrow, and we'll see if we can figure where that's out, where that is at. All right. I do want to talk about a few other things because we have really important week this week. I don't know if you guys have seen all the earnings that are happening this week, so let me just go ahead and bring it to your attention. If you look at all the companies that are reporting earnings, we have Texas Instruments tomorrow after the close. We have Tesla, Microsoft, Meta, IBM all on Wednesday afternoon. We have Apple on Thursday afternoon after the close. And I'm just talking to most tech companies. I mean, you start looking at like UPS. UPS is going to tell us a lot about the global economy. You got Starbucks. That's going to tell you about how consumers are feeling right now. We got MasterCard and a lot of other, American Express, I believe, is in here somewhere. Anyway, that's a lot of consumerism. Plus energy companies like Chevron and ExxonMobil there's American Express. Later in the week, a lot of very important earnings this week. So just keep that in mind, guys, because it is going to be a very, very epic week of trading. We got the FOMC on Wednesday. And matter of fact, let me take a step back. Ryan, how do you feel about the Fed this week, and who's going to be our dissenters, and why is that going to matter?
If we get any dissenters, it's going to be the usual mob. Mirren, Bowman, Waller potentially. We'll see if they do their usual. But it's a bit of a funky week. No one's expecting the Fed obviously to do anything on rates, so it is going to be how they view things moving forward. we've also got the potential for a shutdown still in play at the end of the week.
Actually, a higher potential, right?
Yeah, I mean, Trump signed off a bill, I think, on Friday that was part of the funding, but there's still some other bits and pieces that are going through. This weather's impacting that as well, that you're getting in the States. So they delayed a vote for today that was supposed to happen. That's going to be tomorrow if things are back open again. So the weather could play a part in the shutdown.
But I got to mention this, Ryan, really quick, because of the ongoing situation in Minneapolis. And by the way, if you guys are in that area, yes, and as an American, this is a very, it's an upsetting situation. What's happening here in the United States? It doesn't matter what side of the aisle you come from. There are a lot of Republicans right now that are not going to vote for this. Both Republicans and Democrats regarding this bill because it has a lot of funding to do with ICE right now, and the whole situation is really, yeah. And so this is really going to be a risk for the government moving into next week, and potentially we're going to see a shutdown, and it looks highly likely at this point in time that we are going to get a government shutdown. So if you want to add fuel to the dollar fire right now, to the reasons why you should be on the short side of the dollar, there's one of them too. So sorry, I needed to jump in there, Ryan, just regarding that.
No, that's exactly right. As I say, the weather could be impacting the initial jobless claims data, but that'll be the data we get next week, not this week. And if it drags on, if you get bad weather in February, then that could impact the February jobs report. So yeah, we got the Bank of Canada this week. We got Rick's Bank this week. I think Banxico this week as well. So yeah, lots happening.
Look at this move in nat gas. I mean, and by the way, if you guys are frozen right now, and I know our viewership is down because half the United States is without power. My son's been without power for 2 days in Mississippi. And I mean, trees are actually blowing up there. They're so cold they are exploding right now, which is
third world
crazy.
Country, mate. Third world country.
Yeah, it is really, really crazy. So, but look at this move in nat gas. I mean, fortunately, they have gas. I'm just talking about my son right now, but they got gas, but no power. Fortunately, they got gas, so they can, they keep a fire going. But yeah, I mean, nat gas just ripped 127% extension. I mean, what a move! I mean, look at this move in nat gas from the 618 retracement. By the way, this is just last week. 618 retracement. We have moved up. We went as almost 100% move in 5 days. Talk about a widowmaker, right? I mean, that's a hell of a move. Yeah, so I just wanted to mention for those of you that are in the United States dealing with this cold blast, if you are listening in today because you got power, thanks for being here. Stay warm, stay bundled up, and hopefully your power will stay on. I know the next couple of days are going to be kind of harrowing for a lot of Americans out there. Hey, we got, I don't know if we have data today. I didn't even look.
Yeah, we got a bit of durable goods coming out.
Oh gosh, we need to pay attention to that. Let me get up the data. Hey, Kman, any thoughts today before before these durable goods come out? Anything you're looking at in particular?
In particular, 153.40 dollar yen. Even though in intervention threat time it's always fragile, the levels, but we had a couple of attempts there, and it's holding okay. Obviously, I still think the yen will be one of the movers to start the week, especially after what we have seen at the end of last week. So that one is it. And then for the dollar, obviously, as I've already mentioned, that Aussie dollar, but I also think euro dollar close to 119, 119.15. There's a lot to see up there. So I think there's going to be levels at play for this week, which are going to be quite important, because break those levels, that is probably going to signal that the dollar is not done weakening. But always one step at a time. We need to break the levels before we can really make the next assumption.
All right, and here we go. 3 seconds out from durable goods orders. Here they go. We got the dollar index right in the middle.
5.3%.
Yeah, but durable goods have not had the tradition of moving markets too much. But
Let's see what we're doing here in the
And
SPOOs
it's
really
still
quick.
a bit behind this data because it's for November.
Oh, well, wah wah. Well, who cares? I don't
Yeah,
care.
exactly. I mean, durables have not really moved the needle too much past months.
Yeah, and I mean we got a few pips out of the dollar yen. I think we moved up about 5 or 6 pips, but then that's not moving the needle at all, considering we're seeing these 200 pip moves everywhere. So yeah, big nothing. But you know what? We are seeing highs in the dollar Mexican peso, trying to find some bids down here.
Yeah,
Maybe a little bit of risk aversion.
that is one that I'm keeping an eye on. I've got like really tiny still short, but I'm actually flirting with the idea of buying them back.
Oh, I'm long. I've been buying little bits, and I'm going to be buying more. If you guys are in the Forex Analytics chat room, you know that we've got this descending channel that's in play, and when that breaks, that's your green light, I would say. All right. Well, for those of you that are not in our community, you should be, because if you didn't know that the euro peaked around the 119 level yesterday at the ABCD move, and you were behind the curve this morning when you saw it 50 pips lower, well, you should probably be in the Forex Analytics community. $1 for 10 days. Try it out. Come chat with Ryan, Kman, and myself there every single day, about 24 hours a day. So Ryan, Kman, keep rocking and rolling on the Flow Show. I listened to you guys this morning. It was a great show, especially after the mayhem that we've seen, at the Open. So thank you guys so much for doing what you do. And you both have a great evening in the UK.
Thanks, mate.
All right. Let's see. Our guest today, let me find him real quick. Just give me 1 second, guys. We're going to bring him on over. I'm sorry. Just give me a second. I've got to go back and let's see. There we go. Michael. All right. Let me bring him on over here. And Michael, this would be the first time I'm getting an opportunity to meet you. How you doing, Michael Bergman? Can you hear me? You have to. Oh, not okay. Maybe it's Michael Berman. Hold on, Michael. Sorry, sorry. That was it. Bergman was is the devil dog who's in our community. Sorry, guys. Oh, Berman. Got it. All right, here we go. Let me bring him on over right now. Michael, you should be able to come on over. How are you? Good morning. Let me see if you have to accept being a panelist. There he is. Michael, how are you? Good morning. Happy Monday to you. Happy dollar fire sale Monday for you. Can you hear me? You're still muted, by the way, if you're trying to speak.
Okay. There we go. Hi, Blake. Sorry about that. Or can you hear me okay?
Yep, can hear you just fine. Good morning. Welcome to the show.
Great. Well, it is a good morning. It's 12:30 in Australia at the moment in the morning. So, well, when I say 12:30, it's just after midnight. So,
yeah, that's a long night for you. What part of Australia are you in?
So I'm in Melbourne. I'm normally in Sydney, and I'll tell you a true story. About 6 hours ago, I came on holiday. I came on holiday last night, and it's Australia Day today. And I looked in my diary and said, "Shit, I see Dale had put me in at midnight tonight. So, well, here I am, and I wasn't able to reach Dale. So this is my fourth call with you guys, but never with you. I've spoken to this group. I think this is my fourth time, usually with Dale as the host.
Yeah, Dale unexpectedly resigned a couple weeks back, so I'm taking the helm here for these interviews. So thanks for being here, and thanks for telling us a real story and true story. I don't like the fake stories, so thanks for telling us a true story.
Well,
I appreciate that.
Let me tell you something else that's quite interesting, is that you were talking about the cold in the US. Well, today, Tuesday, so we're a little bit ahead of you. Our time's a little bit ahead of you, but it's 46 degrees Celsius in Melbourne Tuesday. I just looked it up on ChatGPT. That's 114 Fahrenheit. So it's pretty warm.
That is pretty warm. You know, one of my weirdest experiences, I'll tell you a true story. One of my weirdest experiences was back in 2006. I visited Melbourne, and around the holidays, so it was in like early December. I was sweating my ass off. Must have been probably about 38, 39 degrees Celsius there. And yet, you know, I'm looking around and I see like Christmas, sleighs, Santa Claus. And I'm like, how in the hell I'm sweating my ass over here and it's almost Christmas and it's the craziest thing being in Australia when it's hot and celebrating the holidays. It's just the weirdest thing to me.
Yeah,
So anyway,
I'm sure. So if you don't mind, if I can share my screen and I can just talk you through a few things and perhaps give you some background, just so people who don't know me have. Okay, I'm just getting my feel here. So can you see my screen at all? Probably not.
Not yet.
Okay,
I'll let
so
you know when I
Oh,
can.
there we go. There we go. There we go. So just bear with me while I figure this out. So can you see a screen?
I sure can.
Okay. So in the past, so I run a global macro newsletter, signal-to-noise.news, and over the last, let's say, it's normally a daily newsletter. Over the last month, I've been a little bit scarce. It's the holiday season here, and I've also just launched a new software company. And just a little bit of background, I've been trading for 20, I'm 1 year older than you, I'm 54. I've been trading professionally for over 25 years, and I was involved with seeding a lot of traders, emerging traders, and a number of years ago, I had a fintech company that we sold, which was focused on performance analytics. Anyway, just cutting to where I launched just trying to move this damn thing so I can actually. So last week I launched this backtesting software. Now I know your audience is probably more discretionary, so I was a little bit unsure if this is something that would be of any appeal to your particular audience that may be purely discretionary. But I'll just
wait. Can I ask you a
what,
question? Does it have to do with the markets?
Yes.
Then we're interested. All right, go ahead and
Yes.
show us what you got.
Okay. So having been in the industry for such a long time and having seeded many traders, over 100 traders with over $200 million over a period of time, people would come with back tests and invariably they fail in real time. So I've been writing this macro newsletter and I built hundreds of different research scripts that I've been using, and I thought to myself, well, wait a second, there's something that's been bothering me on the back testing side of things that I want to close that loop. So basically, I wrote the software, did everything myself. In the past, I've run a team, but with the advent of AI where we're at right now, I was able to do quite a lot of the work myself. Anyway, the focus here is on overcoming the biases that people tend to they tend to have in their testing, because if you have to analyze why they're failing, most of the time it's because they're cherry picking a symbol. So they run a strategy, it doesn't work for, I don't know, 5 or 10 or 20 different symbols. They find something that works and then they suddenly think they've found the holy grail, or they tweak the parameters endlessly. And that classic old saying, if you torture the data long enough, it will confess to whatever you want. So with that in mind, in 2012, I built a performance, let's say a performance score. It was a skill coefficient that was based on the back of a guy by the name of Marcus Lopez de Prado, who's won the global Quant of the Year award. He runs the Abu Dhabi Sovereign Wealth Fund's quantitative strategies, and he's a pretty clued up guy. He's a professor at Cornell University, and he and a guy, David Bailey from Harvard, wrote this paper where they focused on trying to overcome the biases of overfitting in backtesting. So basically, on the back of that, I created this software that, let's say, rests on the shoulders of big giants, and it incorporates that into, call it, retail, semi-professional trading software. So that's the big speech of it. You don't really need to know the ins and outs of all the intricacies, but at the end of the day, when you do a backtest, it gives you a score, and it's factoring in those biases. And how it does this is that whatever you do in the system, it has memory. Nothing gets deleted, and because that's what people tend to do. We spoke about honesty and putting it out there, and I like the way you guys you share your views. You talk about what you think is happening, and it's in front of a lot of people. So you are accountable if somebody's got some memory, if your calls were any good. So it's with that kind of in mind that I built the software, and that is the crux of it. What's also got
can I ask a couple questions here? So it looks like this backtesting, is it backtesting strategies or is it backtesting your performance? Because those are two totally different things. Like if as a trader, like I want to know, like, hey, tell me what my Sharpe ratio is, or my Sortino ratio, or what's my biggest, like, I want to be able to see my max drawdown versus my average drawdowns, and what risk per trade am I taking on all my trades. So tell me, is it do that, or is it telling me like, oh, this is a good strategy, I'm going to trade that?
Okay, so it focuses on the strategy, but
so not your individual performance.
Yeah, it's having said that, I guess that's what I did in the past, is where I took your actual performance and scored it, and it's not a big deal for me to do that. But that wasn't the focus of this particular software. It will do that as well, because it's got the ingredients within it to do that. But that wasn't the focus, to be 100% frank with you. So the focus is being able to take a strategy. I don't know, I'm just making this up, that you've got a moving average cross, and you think that it's going to make you a lot of money, and it will test that for you.
Got it. Okay. All right. And so how do you input your strategy? How do I say, okay, every time asset class this hit, you get a crossover, the using your example, like a 2 over a 5 or whatever.
So it's got a number of ways that you can do it. So you can do it via let me just pull something up here while I've got you on here. I won't take long, and you can you see the
I can see it. Yeah.
Okay. So you can do it with, if you've got a momentum strategy, you could choose different. So this is like config based, or if I can just learn how to move, when you've got the panel of everything on the top here, I just got to figure out, okay, I'll just do this. So what you can do as well, it comes embedded with Python. So you don't have to know how to do Python, but I've got lots of strategies in here. And in fact, I haven't, because we just launched a few days ago, you can get a trial for free, and I haven't included everything, but I've got over about 300 different strategies that one can implement. And you don't have to, let's just go. The code is written for you over here. And if you don't know how to code or anything like that, you can just put in, I like Claude, if you like ChatGPT, whichever AI you want, and then you could I've trained it. The AI knows everything that's going on behind the scenes under the hood, and based on that, you can tell it, you want to build me a strategy that's a moving average, doing X, Y, and Z, and it will build it into Python, and then you can just deploy it. You can deploy in a back test. You can live trade it in paper. We've created like a virtual paper trading account where you can have as many live paper trading accounts as you want, and you can deploy it up. It integrates with a number of brokers at the moment: TradeStation, Alpaca, all the MT5 brokers, and it's very early in this journey. I mean, as I said, it's about 4 days since we've launched, and just in terms of what I've built in there is, if you've ever done development work, you like it, there's a Kanban board which you can put your back test, your bin review, or you got your journal, research notes, that kind of stuff, and that's I guess high level. That's pretty much it. But one thing, it's also got, I'll just, for the sake of completion here, it's got a data farm which is a place to house all your data. It can be from multiple different sources. So one thing I've found is, over the years, is data is so valuable, and it tends to be very difficult to manage. It's all over the show, and all these different. So this is just one particular place where it can be stored and easy to reference and to use. So
I've got a few questions. Do you mind?
No, please. You guys are my first presentation on this.
First of all, TT says, I'm definitely taking a trial on this. That's awesome.
Okay.
Dollar Bill Scott Henderson says, Michael, do you have an external API access? Meaning, can you export the output?
Yes.
Okay.
Just so you know, I'm absolutely, I want people to feel like they got control, and I want to give as much of the stuff away but just enough, there's just enough that's been held back, that the library for all the reporting and stuff is not open source, and that the AI knows how to work. But also there's enough documentation, or if there's not enough, the AI can, and I will be producing more documentation where you can figure out how to integrate with, how to interact with the back library of it. I've also put quite a lot of work into like a user guide, and I'm a real rookie at videos. I've just started, anyway, there's quite a bit here. And in fact, I did start, where is it? Yeah, I did start, I thought, just to write it up a bit easier, I created a Substack where I'll actually take live examples. So this was one I just did while I was waiting for this call to start, where I took world stock indices and I did a back test over 32 years. That's another thing where I'm a little bit allergic to what most people think. People show me that they've got a holy grail strategy and it's 5 years back testing.
Got it.
So it's like a truth theorem. This is about, that's why my slogan is, don't be fooled by randomness, because most people are, and the whole objective is to kind of do away with that.
So I want to ask you a couple other questions. And by the way, Hannah, good point. She says most trading platforms provide individual performance, including Sharp and Sortino, NinjaTrader, PRT, to name a few. Yeah, and same with a lot of our retail platforms here in the U.S. And but that's why I was curious, and that's why I asked that question. Is it more for the individual trader themselves based on their performance, which, you know, then you'd have to import data, or is it, you know,
So I mean, that's my
the
background.
strategy?
My company that I sold, Psyquation, so we had over 100,000 trading accounts. We were like, let's call it similar to my FX book, if you've ever come across that platform.
Yeah.
We launched it in 2016, and yeah, it was all based on a score and alert system, basically telling you where you're making mistakes. And this was but you know, just when you said that, so you're the second person to ask me, does it actually show like performance metrics? And I think because we had the Rapper score, which was eventually taken over by F.A.C.E, Jack Schwager's company, and then we had the Psyquation score, and then more recently we had another score. So for the last almost 15 years, I've been creating performance analytics scores, and I've got a new one, the S2N score. So it would apply to, you know, if you've traded your strategies and you've got it in an account and you wanted the performance metrics, it would be able to do that as well. It would show.
So let me. I know I'm going to ask. I'm going to ask this question. I'm going to play a little bit of devil's advocate here, because I see you have an AI assistant inside of your platform. There's a lot of you know, these new models, especially if they've connected to outside external data feeds, that can gather a lot of this information for you and give you, like, in more of a, you know, the language models being able to just go, hey, well, you know, how does it look, you know, over the last 20 years if I trade the euro dollar when the, you know, 5-day moving averages cross over the 20-day moving average? What's to say, and how are you going to take on the onslaught of AI as it continues to ramp up?
Yeah, okay, so that's a great question, and so the short answer is having spent a lot of time in that space, that's the reason I built this. Because when you go to ChatGPT or Claude or whichever one it is, and you ask it to build you that, it'll give you code snippets, but it doesn't have access to data necessarily. And so you then have to take that, run the strategy on your own, in your own infrastructure. So you've got to get the data right, you've got to get the reporting right and consistent and all that kind of stuff. So the whole idea of this is to harness this is harnessing that AI. It's you can use that AI within the Navigator platform to build your strategy. It's just what the Navigator framework does is it just provides, let's call it a container, where there's consistency with reporting. It's focused on this idea of never losing memory. So it knows that, hey, Blake, you're only showing the one that's worked, but you've run, let's say, 99 back tests that have been very average, and you've just picked the one. So that kind of story is no LLM out there is doing that in terms of the framework. What is next for this, and we'll see how it goes, is that what I'll do is create an MCP, so like an agent that will be able to work in this framework and just run continuously and build more strategies. So but I'm very allergic to allowing AI to run amok. So, you know, just so you know, I've been in the AI space we built our first AI model. It wasn't called AI at the time. It was called machine learning. Well, it was actually pre-machine learning. This is in 2006. And I built a model called Leonardo, and we had neural networks, all those kind of things, which falls under the framework of AI. And And in 2000, and let me get this right, in 2020, my partner and I, we launched an AI university in Ukraine, an on-campus master's degree in AI. So it's AI. I've been around the space for quite some time, and it is brilliant, and it's going to change the world. And if you had to ask me, I've been writing about it. I think it's going to have a dramatic impact on jobs. And Cyquation, we had 33 developers, and which are I'm one guy, and I built. Okay, it's a little bit buggy at the moment. I'm a little bit embarrassed with some of the bugs that I'm encountering, but it's one guy. I haven't had as many testers as I would have had in the past, but be that as it may, it's a game changer. So my view just is to harness the AI oracle. What I call the AI oracle is inside this beast, so you can use it to your benefit, but it needs constraint. And it's not so easy just to tell an AI model, build me a moving average, or it's easy to tell it to build me a moving average, but it's knowing that you can't just run through a whole bunch of moving averages to find the one that you like, and then suddenly think that you've
right. Well, hey, Michael, we're gonna have to wrap things up here in a second. But Hannah did ask, is this a futures or CFD data? Where's the data coming from? And I think you said a little bit earlier the input is through. I'm sorry, you said it was.
So the data is from wherever you want it to come from. So this applies to everything. It's geared for everything except options at this stage. So futures, CFDs,
where specifically are you drawing your data from?
So me particularly, I've connected to Norgate data for daily, and I've got a whole heap of different data sources that are TradeStation and a bunch of them. But it comes with there's 8 gigs of free data that it comes with, going down to 1 minute data that comes in the trial. That's from a variety of sources where I haven't breached any data restrictions. It's also, by the way, because I've got a CCXT library, it's got over 100 crypto exchanges that you can connect it to, that can connect. So you tell me what anything with an API can be connected to this framework. So it's your own data.
All right. Thank you very much for answering that. So Michael, I appreciate you being here on our show. What's the best way for people to get a hold of the S2N Navigator?
Yeah. So the best thing to do is s2n-navigator.com and just sign up for the trial. There's no credit card, nothing like that. And I'll work with you. I really value any feedback, and there'll be no, start the free trial, and I'll be in discussion. You'll get some onboarding where you can reach me easily, and yeah, I'm very much in the phase where I will take on board any feedback I can get and make the product more suitable for people where it makes sense. But I've got strong views in terms of what works, and having been around the block, but I'm always willing to learn. And
all right.
And for those, just I just wrote I thought was a pretty damn interesting piece on Mr. Trump earlier today. Where's my? I think I cut it down in my newsletter. Anyway, we won't worry about that now. But if you find the s2n-navigator.com, it'll be great if you give it a try, and we'll take it from there.
All right. Well, Michael, thank you so much for spending the time with our community. Really
Yeah,
appreciate it. And if you guys don't follow, if you don't follow Michael on Twitter, it's Berman, not Bergman, which we have
Yeah.
we had a Bergman here in the in the crowd, one of our traders from our community. At S2NN News is where Michael's at on Twitter or on X. And make sure you give him a follow. So thank you, Michael, for spending your time with us. And I'll be
Thank you,
reaching
Thomas.
out to you
Thanks,
to have
man.
you back and see how you've progressed over time.
Thank you very much. Much appreciated.
All right. You guys all have a great day. For those of you that are in the Forex Analytics community, I'm going to see you in 15 minutes on the Morning Edge. And good luck today.